Good evening. Please come to the next important accounting standard, and that is called borrowing cost. This is a very important standard because you will find its reference in some other standard also. Like when you study AS10, you will find it is mentioned about borrowing cost. Or when you studied AS2 inventory, there also there was a reference of accounting standard 16. Practically also, this standard is very useful because many companies in India have borrowed huge sums of money. So when you borrow money, there is a borrowing cost. The question is, what should be the treatment of the borrowing cost? So you will reply, what are the possible treatment of borrowing cost? What are the possible treatment of borrowing cost? What can you do with borrowing cost? Please reply, where will you transfer the borrowing cost? I have paid interest 10 lakh rupees. What is the treatment of this 10 lakh rupees interest? The answer is borrowing cost can be charged to P&L account. Borrowing cost can be charged to P&L account, that most of you know. That is what has been taught to you from 11th standard till date. But in this standard, you will learn that the standard requires you to capitalize the borrowing cost. The standard requires you to capitalize. Capitalize means you add to the cost of the asset. You add to the cost of the asset, or borrowing cost can be deferred and amortized. Like for example, discount or premium on debenture. Discount or premium or debenture, they are amortized and then they are written off over the life of that debenture. The focus of this standard is whether borrowing cost can be capitalized or not, and if yes, under what condition borrowing cost can be capitalized. So that is my point of discussion. Okay, and this standard is important because a wrong treatment, of borrowing cost will affect P&L account and will affect balance sheet. How? Suppose, let us say, Bharti Airtel Limited. Bharti Airtel Limited has a borrowing of 1 lakh crores rupees. Bharti Airtel Limited has a borrowing of 1 lakh crore rupees, and they are paying interest at the rate of 8% per annum. So if I multiply the total interest they have to pay is 8,000 crore rupees per annum. Total interest only they are paying 8,000 crore rupees per annum, and there are many such companies which have borrowings in thousands of crores of rupees. Now 8,000 crore, if you charge to P&L account, profit will reduce by 8,000 crore. Okay, in balance sheet your net worth or shareholder fund will reduce by 8,000 crore. But suppose instead of charging to P&L account, what this company did, suppose only they capitalized it. They capitalized it. It was supposed to be charged to P&L account, but they capitalized it. So this will increase the profit by rupees 8,000 crore. Oh my God. So company can increase the profit by simply capitalizing the borrowing cost, which actually should have been charged to P&L account. My net worth will also increase. Higher the profit, higher the net worth. Is it right? So my net worth will also go up. Wonderful. So therefore the standard says you don't decide which borrowing cost should be capitalized and which borrowing cost should be charged to P&L account. We will guide you. If the borrowing cost is eligible for capitalization, we will allow you to capitalize. If borrowing cost is not eligible for capitalization, then will not allow you to capitalize, and therefore your financial statements will reflect true and fair view of profitability position and the financial position. So with that objective, this standard was introduced. So your first paragraph, scope paragraph, says the objective of this standard is to prescribe the accounting treatment for borrowing cost. So we are not going to discuss anything else in this chapter. Our only discussion would be the treatment of borrowing cost, what AS 16 has to say about it, and second is the scope. In second line, you just mentioned their scope. The standard is to be applied in accounting for borrowing cost, and this standard does not deal with, underline, does not deal with actual or imputed cost of owner's equity or any other item forming part of equity but not classified as a liability. So listen to me carefully. We have in our balance sheet equity share, preference shares. Equity and preference share, they form part of shareholders fund, which you have studied in company final account. Equity share capital and preference share capital will form part of shareholder fund. So suppose we pay dividend, that is actual payment made, dividend. Suppose we pay preference dividend, actual preference dividend paid. This is not treated as borrowing cost because these are not borrowed money. These are owner's fund. Then the student will ask, can I take opportunity cost, which is called imputed? Imputed cost means opportunity cost. Opportunity cost means if this money was invested somewhere else, if the funds were invested at some other place, then what rate of return I could have earned? Ultimately, you have invested money here, you could have invested elsewhere. The standard says even imputed cost is not allowed. Sorry. Opportunity cost cannot be allowed. Our accountancy is based on historical cost convention. We can't account in our books of account hypothetical number, notional numbers, imputed numbers which have not actually been incurred. So standard says what you have not actually incurred, forget it. You are not allowed to treat any payment made to equity share capital, preference share capital as borrowing cost. So these are outside the scope of the standard. Even if they give you in the question dividend paid to equity and preference shareholder, kindly ignore, they are not borrowing cost for the purpose of accounting standard 16. Okay. Next is we are going to now discuss two important definitions. We are going to discuss two important definitions which will be very useful to you. First is the definition of borrowing cost. What is borrowing cost? What is borrowing cost? Now, normally we will say borrowing cost means interest. You are right. But borrowing cost means interest and other cost. There are some other cost also which are also treated as borrowing cost. Sorry for that bad throat. Okay. So borrowing cost will include not only interest, it will include some other cost also. Which other cost? Those other costs which are incurred in connection with borrowing of funds. Those other costs which are incurred in connection with borrowing of money. You have to read it together. Those other costs which are incurred in connection with borrowing of fund. For example, when you go to take a bank loan, what bank says? Sit down. You will sit down. Then the bank says, take this form. You take the form. Then they will say, okay, we are going to give you the loan, but then you will have to pay processing fees, loan processing fees. Then they will say, you will have to pay documentation fees. Then they will say, you have to pay stamp duty. Okay. Oh my God. These are also borrowing cost. Sometimes if I have to take a loan, I am a layman, ordinary man. I don't know how to approach a bank. I don't know how to approach a bank. So what do? I take the help of a chartered accountant like you people. And this chartered accountant prepares a project report. Then based on this project report, I apply for the loan. The CA charges me some kind of commission, whatever you call it, commission or fees or brokerage. They will say we will take 2% of the loan amount as our project fees, project report fees. Even this is, even this is borrowing cost because it is incurred in connection with borrowing of funds. So the standard has given a list of items which will be included in borrowing cost. So this can be a theory question also. What are the borrowing cost as per AS 16? So you will say borrowing cost includes. Includes means the definition is not exhaustive. Anything which is not mentioned here can also be a borrowing cost if it is related to borrowing of funds. So first is interest charges, next is commitment charges. Commitment charges means bank charges. Bank charges for keeping the funds ready. So you will say, I will take the loan after 2 months. Bank will say, okay, we will provide you the loan after 2 months. Bank says, we will provide the loan after 2 months, but you have to pay some charges because I will have to make the funds available when you will demand. So for that they charge a small amount called commitment fees. Bank has committed to provide you funds when you will require it. Okay. Then as I said, amortization of discount or premium related to borrowing. If you have issued debenture at a discount, or if you have issued debenture which is to be redeemed at a premium, which is to be redeemed at premium, then what normally we do, we amortize this discount or we amortize this premium over the life of the debenture. Over the life of the debenture. For example, face value of debenture is 10 lakh, but you have issued at 9 lakh rupees. So there is a discount element of 1 lakh rupees. And suppose the life of this debenture is 5 years. So we are going to amortize 20,000 rupees discount every year. So as per the standard, even this 20,000 rupees discount, even this 20,000 discount which you are amortizing every year will also be called as borrowing cost. Or similarly, if you have issued debenture, issued 10 lakh, but you have to pay a redemption premium, you have to pay a redemption premium of 50,000 rupees. The life is 5 years. So you have to amortize annually you have to amortize 10,000 rupees. This annual amortization of premium on redemption of debenture is also borrowing cost. Although so far no question has been asked on this adjustment. Still, next point, number 3, amortization of ancillary cost incurred for arrangement of borrowing. This I have explained. Ancillary cost means fees, commission, brokerage, processing fees, stamp duty, and many other such charges. And many other such charges are called incidental or ancillary cost related to borrowing. Then we have finance charge under finance lease that you will study in AS 19 leases. So when you take the asset on finance lease, you are paying finance charge to the lessor. Even this finance charge paid to the lessor is also called borrowing cost because it is like interest only. It is similar to interest only. Next is point number 4 or 5, exchange difference. Very important because soon I am going to solve two questions on this point only. Mark important. Very soon we are going to solve question on this point only. Exchange difference to the extent regarded as an adjustment to interest cost. Exchange difference to the extent regarded as an adjustment to interest cost. Now the student will ask me a query. What is the meaning of exchange difference to the extent regarded as an adjustment to interest cost? This is very interesting. You can't even visualize what I am going to explain to you next. So continuously pay attention. This is really, really important now. Now what happens? You are an Indian company. You borrow from USA. Now please tell me, why do Indian company borrows from USA? Please reply. Why will Indian company borrow from USA? Please reply. Why will an Indian company borrow from USA? If you want to understand this concept, you have to answer. Why will an Indian company borrow from USA? What is the benefit? Please reply. Okay, so the benefit is interest rate is very low. In India, the interest rate is 12% per annum, whereas in USA, you can borrow funds at 4% per annum. Oh, wonderful. You can borrow at 4% per annum. So everybody should run to USA. Everybody should pack their bag, go to USA, borrow money at 4%. But why it does not happen? Why I am sitting here shouting every day for 4 hours? Why don't I simply go to USA and borrow money at 4% and lend to somebody in India at 12%, 8% I will earn? Why it does not happen? Because of exchange rate fluctuation. Because of exchange rate fluctuation. Exchange rate fluctuation. So there is benefit in interest rate because we get lower interest rate, but there is a loss due to exchange fluctuation. There is a loss due to exchange fluctuation. You have studied accounting standard 11. So today I will require some knowledge of AS 11 also. In accounting standard 11 you have seen, suppose you have taken a loan $1 lakh. When you had borrowed money, the rate of exchange was 50. When you had borrowed money, the rate of exchange was 50. So 50 lakh rupees you received. After 1 year, when you go to repay the loan, the exchange rate is 60. Oh my God. So you have to pay 60 lakh rupees. Oh, so what is the exchange loss here? Exchange loss is 10 lakh. Exchange loss is 10 lakh, and that is just because the exchange rate changed from 50 rupees to 60 rupees. The numbers are just for understanding purpose. Numbers are just for understanding. Now what the standard says, on one hand, you have exchange loss. On the other hand, you have interest saved due to foreign currency borrowing. Now you see the interesting part. Because you have borrowed money, you suffered exchange loss, but at the same time, you saved the interest. So what I am going to do, this exchange loss I am going to divide into two parts. To the extent, to the extent it is equal to interest saved, this portion, to the extent it is equal to interest saved, this portion will be treated as borrowing cost. Oh, this will also be treated as borrowing cost. Exchange difference, to the extent interest saved, will also be treated as borrowing cost because it is related to borrowing of funds. Had you not borrowed in India, had you not borrowed in USA, you would have borrowed in India. And if you would have borrowed in India, you would have paid this much interest higher. Okay, you would have paid this much interest more. So therefore, even this portion I am going to treat it as borrowing cost. Remaining will be treated as per AS 11. Remaining exchange difference will be treated as AS 11. So when you will go to AS 11, they will say you transfer this exchange difference to P&L account. So what I will have to do, when a borrowing is in foreign currency, I need to calculate exchange loss, I need to calculate interest saved, To the extent interest saved, to the extent interest saved will be treated as borrowing cost. To the extent interest saved, exchange difference will be treated as borrowing cost, and remaining exchange difference will be given treatment as per AS 11. So exchange difference to the extent interest saved will be treated as borrowing cost as per this standard. Excess exchange loss will be given treatment as per AS 11. Okay, so that is what this line says. Exchange difference to the extent regarded as an adjustment to interest cost will be treated as borrowing cost. Will be treated as borrowing cost. So now you are right. So let us solve one question on this. You will find one example one printed in your book. This example has three situations. Situation 1, situation 2, situation 3. Okay. Situation 1, situation 2 and situation number 3. So what I am going to do, I am going to explain 1 and 2 and 3 you do as homework. So you mark 3 as homework. Okay. You mark 3 as homework. So what is situation number 1? I am going to just write down the main numbers required for situation number 1. Question is printed in your book, so you don't worry. A company borrows 20,000 US dollar. When they had borrowed this $20,000, that day the rate was rupees 45 and the company had borrowed on 1st April 2010. But and the rate of interest was 6% per annum for US borrowing. On 31st March 11, end of the year, the rate is 48. Local interest rate. Local interest rate means in India, if you borrow, the interest rate is 12%. In India, if you borrow, the interest rate is 12%. What is the borrowing cost? What is the borrowing cost? As per, just forget this line. What is the borrowing cost as per AS 16? Question is, what is the borrowing cost as per AS 16? Then you will wonder what is so great about this question. This question is important. You have borrowed $20,000 at 6%. Why did you borrow at 6%? To save interest. But what happened? When you borrowed money, the exchange rate was 45. And after 1 year, the exchange rate is 48. So therefore, there is a exchange loss. So the standard says that portion of exchange loss which is equal to interest saved will be treated as borrowing cost and remaining exchange difference will be treated as per AS 11. Okay. So first I am going to explain to you and then we will read the answer. You can read the answer yourself later. Only concentrate on understanding. What is the interest paid on US loan? First we will calculate interest paid on US loan. We have borrowed $20,000. So I am going to calculate interest in dollar first into 6%. So I have to really pay 20,000 into 6%. How much is that? I have to pay $1,200. When will I pay interest? At the end of the year. So at the end of the year, the rate of exchange is 48 rupees. When I go to make the payment, the rate of exchange is 48. Interest will be paid at the end, not at the beginning. So I will take the end rate. So please calculate 20,000 into 6% into 48, 57,600 I have to pay. This should be one calculation, which is actual interest paid. Actual interest paid is always the borrowing cost. So this is one borrowing cost. This is one borrowing cost in our calculation. Second thing I will calculate exchange loss. Second thing I will calculate exchange loss. So exchange loss will be $20,000 we have borrowed. Exchange rate has increased from 45 to 48. So this is a loss of rupees 60,000. The value of my liability has gone up by 60,000 rupees. This is called exchange loss. Now the third calculation I will do, interest saved if borrowed in India. Answer is printed in your book. Had you borrowed in India, you would have paid uh, interest at the rate of 12%. But in USA, you are paying 6%. So how much is the interest saved? So for that, I need to first find out how much amount I would have borrowed in India. How much amount I will borrow in India today if I want $20,000 and today the rate is 45, the equivalent amount you would have borrowed in India, the equivalent amount you would have borrowed in India would have been 20,000 into 45. Today, $20,000 is equal to 9 lakh rupees. So either I borrow 20,000 or I borrow 9 lakh, they are equal today. So I will borrow 9 lakh and I will pay interest 12% on this. This is what I would have paid in India. That is notional number because actually I have not borrowed in India. I am only comparing. If I would have borrowed in India, how much I would have paid. So that is something. And actual interest paid is 57,600. So my dear student, please tell me what is the benefit of borrowing in USA. I saved 50,400 rupees. Oh my God. I saved 50,400 rupees. I actually paid only 57,600. Had I borrowed in India, I would have paid 1,08,000. So interest saved is 50,400. Interest saved is 50,400. Okay. Is everybody able to understand? I would have paid, once again, I would have paid 1,08,000 if I would have borrowed in India, but actual interest paid is only 57,600. Therefore, I could save 50,400 rupees interest saved. Now, what the standard says, what is your exchange loss? Your exchange loss is 60,000. This you divide into two parts. To the extent interest saved 50,400, this is also borrowing cost. To the extent interest saved is also borrowing cost, and the excess amount excess loss, you will apply accounting standard 11. So usually AS 11 will ask you to transfer the exchange difference to P&L account. Now the last thing you understand, what is my total borrowing cost? My total borrowing cost will be interest plus exchange difference to be regarded as adjustment to interest. So actual interest is 57,600. This is no doubt a borrowing cost because this is actual interest plus even 50,400 rupees. This 50,400 rupees is also borrowing cost. So please reply, what is my total borrowing cost as per AS 16 in this question? So the answer will be 57,600 plus 50,400. So answer is 1,08,000 rupees. 1,08,000 rupees. Total borrowing cost is actual borrowing cost 57,600 and interest saved 50,400 rupees. Is it right? So my borrowing cost as per AS 16 would be 1,08,000. Any query? Any query? Come on. If you don't have a query, then I will go to next example. Answer is printed in your book. So please come to example 2, middle column. No query? Okay. So let us change the example slightly. Let us change the example slightly. Now they are saying company borrowed US dollar 45. Same rate of interest was 6%, same, but even the exchange rate on 31st March 2013 is same. So these three variables is same, but what they have done, they have made a change here. So this is the change in the question. Now if you borrow in India, then the interest rate is 14%. So the question is, what is the total borrowing cost? This is a 4 or 5 mark question. Can you believe that? So what I'll do, I will first calculate actual interest paid. Actual interest paid is, I have borrowed $20,000 at 6%. I have borrowed $20,000 at 6%. So I have to pay to the foreign lender 20,000 into 6%. But when I go to make the payment at the end of the year, the exchange rate is 48. So I have to pay 57,600 rupees. So once again, the first calculation is same. I have to pay 57,600 actual interest to be paid. Second thing, I will calculate exchange loss. When I borrowed $20,000, the rate was 45. At the end of the year, the rate is 48. 3 rupees exchange loss per dollar into 20,000. So I have an exchange loss of 60,000 rupees. Up to this, the answer is same. Then we will calculate interest saved. How much interest did we save? Same calculation. 20,000 into 45. 9 lakh I would have borrowed at the rate of 14%. This is the interest you would have paid in India minus actual interest paid on dollar borrowing is 57,600. So can somebody tell me how much is the interest saved this time? How much is the interest saved this time? Please reply. So one student is saying 68,400. Oh, 68,400 rupees is the interest saved. Now you see there is a problem. My exchange loss is 60,000, but my interest saved is 68,400. This time the interest saved is more. Purposefully I have taken two examples. In first example, exchange loss was more. In second example, interest saved is more. So what I will do, this entire exchange loss of 60,000 will be treated as borrowing cost. Will be treated as borrowing cost. Will be treated as borrowing cost. Entire exchange loss of rupees 60,000, this one will be treated as borrowing cost. So my total borrowing cost will now become actual interest 57,600. This is my first working, and this note which says the entire exchange loss will become borrowing cost. So can you tell me now what will be the total borrowing cost under this example? What will be the total borrowing cost under this example? So the answer will be 57,600 and plus 60,000, which comes to 1,17,600. 1,17,600. Is it right? 1,17,600. Most of you got it right. Now the $1,000,000 question is, this portion of interest saved you have considered here. What about this excess interest saved? What is the treatment? Do you have any treatment of excess interest saved? Do you have any treatment for excess interest saved? Any answer? You have saved 8,400 rupees more. You have saved 8,400 rupees more. So do we have any excess treatment? Do you have a treatment of excess interest saved? So you will say, you can write it also if you want, no treatment. No treatment of excess interest saved, because it is a notional amount. Because it is a notional amount. You can write down nearby. Because it is a notional amount. What is a notional amount? Notional amount means this amount does not appear in our books of account. This figure, interest saved, is an out of the books calculation. We are just visualizing, oh, if I would have borrowed in India, how much I would have paid, how much I have saved. So these are notional calculation. In my books of account, I have only two figures. If you prepare a trial balance, you will have only two figures there. One is that interest paid, which will appear in the debit column, and one is this exchange loss, which will also appear in debit column. So only two figures are appearing in your ledger books, and those two figures I have considered. So therefore, excess interest saved is ignored because it's a notional number. This excess interest saved does not appear in our books of account. Okay, so this is the answer of this example 2. Answer is printed in your book in step by step manner. So today you will do homework. That is the third part you will do as homework. Okay, now I'm going to ask you a question. Quiz question. Okay, quiz. One is right, three answers are wrong. Dang, dang, dang. Quiz. For 100 rupees, which of the following cost may not be eligible for capitalization as borrowing cost under AS 16? Which of the following is not eligible? Not eligible for capitalization as borrowing cost under AS 16. So please try. For this, you have to refer the paragraph 1 and 2. I just want to check whether you are listening or not. Okay. So please answer whether the answer is A or B or C or D. Interest on bond. Interest on bond issued to finance the construction of a qualifying asset. Second is amortization of discount or premium relating to borrowing that qualify for capitalization. Third is imputed cost of equity. And fourth is just now we have done exchange difference arising from foreign currency borrowing to the extent they are regarded as an adjustment to interest cost. So anybody wants to reply which of this is not eligible for borrowing cost? Is not eligible for borrowing cost. The answer is Sanket is right, Pawar is right, Tanya is right. So three students have correctly answered. Imputed cost of equity is not borrowing cost. Imputed cost of equity is not borrowing cost. So the answer is C. Very good. Satish Kumar is also right. Very good. Now second definition today will complete is qualifying asset. In short, we will write or speak QA, qualifying asset. Now this standard says if borrowing cost is incurred on acquisition, construction or production of a qualifying asset, if borrowing cost is incurred on ACP, acquisition, construction or production of a qualifying asset, then it will be capitalized. So which kind of borrowing cost can be capitalized? Those which are incurred in acquisition, construction or production of a qualifying asset. Now the question will be, what is a qualifying asset? What is a qualifying asset? So therefore, I am going to define what is qualifying asset. Kostub is right. Answer was C. Very good. You should reply fast. What is a qualifying asset? So you have to keep this definition in mind. Qualifying asset means that necessarily means it is inherent. It is inherent in the nature of asset. It is inherent in the nature of asset. For example, you have to construct a building which is 10-storied building. Can you complete this in 5 days? 10-story building. Will you complete in 5 days? The answer is no. So that means it is necessarily going to take substantial period of time to get ready. construction of a power plant, construction of road, dam, bridge, tunnel, ship, okay, even a CA student, they are necessarily going to take substantial period of time to get ready for its intended use. To get ready for its intended use. That is the purpose for which you are going to uh, construct or manufacture or produce it. Example here is fixed asset or investment property, or that necessarily takes substantial period of time to get ready for its sale. Oh, there are some inventory which takes substantial period of time to get ready for sale. For example, liquor. Okay, they might take some years to get ready for its intended sale. So the standard says even this will be treated as qualifying asset. Okay. So what are the examples of qualifying asset? Qualifying assets will include manufacturing plant, because if you construct a power plant, steel plant, car plant, where manufacturing has to be done, it takes substantial period of time before the production will actually start. Power generation facility, okay, inventories that require substantial period of time to be brought to the saleable condition. For example, liquor, even timber, okay. Then a toll bridge that usually takes more than 1 year to build. A ship that normally takes 1 to 2 years to complete. Investment properties like building, okay, they take substantial period of time to get ready. So the standard says these are qualifying asset, and borrowing cost, if incurred on qualifying asset, will be capitalized. Borrowing cost, if incurred on qualifying asset, will be capitalized. Then what is not qualifying asset? What is not qualifying asset? So they have mentioned here that inventories which are routinely manufactured, inventories which are produced routinely, daily, okay, inventories which are produced in large quantity on a repetitive basis over a short period. Okay, so let us say this is the calculator. Okay, this will come under this kind of heading. This company Casio must be manufacturing 1,000 calculators every day, not a qualifying asset. Or say this pen, okay, although it is an electronic pen, but similar pen that you are using, or let us say this pen, is it a qualifying asset? The answer is no, because these are routinely manufactured in large quantity on a repetitive basis. More importantly, it does not take substantial period of time to get ready. So therefore, such inventory items are not qualifying asset. Okay, tell me, uh, Indica car, can it be a qualifying asset? Indica car, is it a qualifying asset? The answer is no, because every day they manufacture 200, 300 cars. But if it is a designer car, specifically designed for a particular customer and it takes substantial period of time, it might be a qualifying asset. Okay. Then next is asset which are ready for intended use at the time of acquisition. When you purchase the asset, it was ready for intended use, ready to use asset. For example, this question comes in the exam. A company purchases a car and company takes car loan. company pays interest on car loan, can this interest be capitalized over the cost of the car? The answer is no, because the car is in a ready to use condition. Not only car, suppose you buy an aeroplane, okay, for your personal use, and you have paid 3 crore rupees to buy, and you have borrowed money to buy aeroplane, you pay interest on this borrowing money. This is not to be capitalized. The reason being, this aeroplane was already in a ready to use condition. So any asset which is ready to use at the time of acquisition is not a qualifying asset. And if it is not a qualifying asset, dear friend, borrowing cost related to that asset cannot be capitalized. So the important condition is that it must be a qualifying asset. Now the definition of qualifying asset is an asset that necessarily takes substantial period of time. What is substantial period of time? What is substantial period of time? Is it 1 month, or is it 1 week, 1 year, 3 year? Ask a CS student. Even 3 hours may be substantial period of time. Okay. So somebody has to define what is substantial, because it involves judgment. For somebody, 3 hours can be substantial. For somebody, 3 years also may not be substantial. So therefore, the institute have said in Accounting Standard Interpretation 1 that ordinarily a period of 12 months is a substantial period of time. So what they are saying is, ordinarily, generally, 12 months is a substantial period of time. However, understand, very important double underline, unless a shorter or a longer period can be justified. So this is my cutoff line, 12 months. Less than 12 months, more than 12 months. Now the standard says, or this accounting standard interpretation says, normally take cutoff period as 12 months. However, less than 12 months can also be justified. Can also be justified. For example, I have to construct a building. Example, listen to me carefully, because there are some questions in the book where the asset gets ready in 9 months. I have to construct a building. Normally, a building would require 1 year to complete. Normally, a building would require 1 year to complete if you work as per the normal speed. But what I did, I worked 24 hours every day, non-stop. No Sunday, no Monday, no Diwali, no Holi, no Dashera, no any other festival, no Guru Nanak Jayanti, no Ramjan, no Eid, no Gandhi Jayanti. And then I have kept double staff. Normally, this would require 100 staff, 100 employee. I have employed 200 persons to construct this building. So what will happen? Building which normally takes 12 months to complete, we have completed in 8 months only. Oh, can you call it as a qualifying asset? Yes, you can still call it as a qualifying asset, because you can justify that by putting more hours per day, by putting more staff per day, I could complete in less than 12 months time. Hence, it is my qualifying asset, and hence I should be able to capitalize the borrowing cost. So what the student will do? The student will check in the question usually. 12 months or less than 12 months. So even if it is around 9 months, 10 months, 8 months, you can assume it is a qualifying asset and you can simply solve by applying AS 16. There are a few questions in the book where the asset got completed in 10 months. Now the student will say, what should I do? By looking at the question, you can understand that this is a problem of AS 16 and you can assume 10 months also as substantial period of time. Calculate the borrowing cost to be capitalized. So one more quiz for you. Answer this quiz on the screen. Let me see whether you are listening to me or not and whether you are understanding or not. So quiz number 2 for 200 rupees. Which of the following may not be considered as a qualifying asset? May not be considered. So please find out from your knowledge that you gained today, which is not a qualifying asset. So three items are qualifying, one is not qualifying. So you have to identify not qualifying asset. Think and answer. I will give you 30 seconds to think. So I have got few answers. A power generation plant that normally takes 2 years to complete is a qualifying asset. An expensive private jet that can be purchased from a local vendor, it is a ready to use, not a qualifying asset. The answer is B. Sanket, Pawar, Tanya, Prithvi, Neelam, they have given me the correct answer. A toll bridge that takes more than 1 year to build is a qualifying asset. Ship that takes 1 to 2 years to complete is a qualifying asset. So most of you gave the correct answer. I am very happy that you are listening to me. This is one of the very interesting standards and you are surely going to enjoy this. Today's topic is very interesting. So come to your book, paragraph number 3, eligible borrowing cost. Which borrowing cost is eligible for capitalization? Which borrowing cost is eligible for capitalization? So this standard AS 16 says, which is a very important line, those borrowing costs which are directly attributable, that means you can directly link it to the acquisition or construction or production of a qualifying asset. So the standard says borrowing cost which can be directly linked to a qualifying asset, whether it is acquisition or construction or production. It can be for acquisition also. For example, you may use a machine in construction of a building. This machine will be fitted in this building construction. Machine may be ready, but we need to construct the building where this will be required. Construction is okay, building construction, dam construction, and production can be of inventory also. So what the entity has to prove, that this borrowing cost is directly attributable to the acquisition, construction and production of a qualifying asset. If the answer is yes, then they will be capitalized. Now how do I check? How do I check whether the borrowing cost is directly attributable? Your query is, how do we check borrowing cost is directly attributable? So you have to see if this qualifying asset would not have been there. Suppose this is my balance sheet. In balance sheet we have a qualifying asset of 3 crore and on the other hand we have borrowing of 8 crore also, suppose. So you have to think, if this qualifying asset was not there, will my borrowing be also the same or will my borrowing level will be lower? So if the answer is, if there is no qualifying asset, I don't need so much borrowing, then you will say borrowing cost is directly attributable. Because there is a qualifying asset, the level of borrowing is high. Had there been no qualifying asset, the level of borrowing would have been lower. In that case, we can say the borrowing cost is directly attributable to the acquisition, construction, or production of a qualifying asset. And if the answer is yes, then such borrowing cost will be capitalized. Such borrowing cost will be capitalized, is eligible for capitalization. Will be capitalized means eligible for capitalization. Okay. Next point, test for recognition of borrowing cost. So suppose I have demonstrated, I have proved that borrowing cost is directly attributable to acquisition, construction or production of a qualifying asset. Will you still capitalize it? So before you capitalize it, just ask two more questions. Question number one, ask yourself whether the qualifying asset will result in future economic benefit to the enterprise. This qualifying asset over which we are going to capitalize the borrowing cost, will it result into future economic benefit to the enterprise? If the answer is yes, then you will capitalize. If the answer is no, this asset will not generate future economic benefit, then do not capitalize. Then do not capitalize. Okay. So you will tell me, you will ask me, give me the example of a qualifying asset which will not generate future economic benefit. Oh, there is a qualifying asset, but it does not generate future economic benefit. Example, loan taken to construct a school building. School building is a qualifying asset because it will take substantial period of time to get ready. But the school building is in a remote village. And why this company is constructing this school building in a remote village 500 kilometer away for CSR purpose. What is CSR? Corporate social responsibility, which means that the company is creating this school building to meet its CSR expenditure requirement. But this building will not generate any future economic benefit to the enterprise. Therefore, in this case, even if you have taken a loan for a school building, the interest will not be capitalized. The interest will be charged to P&L account. Second condition to be satisfied, question number 2 you need to ask is, can the borrowing cost be reliably measured? Can the borrowing cost be reliably measured? If the answer is yes, borrowing cost can be reliably measured, because borrowing cost sometimes can be complicated also. You may have borrowing from multiple sources in multiple ways. So in case if you think borrowing cost cannot be reliably calculated, then borrowing cost cannot be capitalized. Okay. So what you have to do, in order to capitalize the borrowing cost, you have to ask certain things. For example, borrowing cost should be directly attributable. Borrowing cost should be directly attributable to the acquisition, construction and production of qualifying asset. If this test is passed, then you have to check that qualifying asset should generate future economic benefit. Qualifying asset should generate future economic benefit. And then you have to also check that borrowing cost can be reliably measured. Borrowing cost can be reliably measured. If the answer is yes, 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 welcome to capitalization. Welcome to capitalization. If the answer is no, any of the answer is no, such borrowing cost cannot be capitalized. So if somebody asks you in your interview, when will borrowing cost be capitalized? Borrowing cost should be incurred on acquisition, construction, production of a qualifying asset. Qualifying asset should generate future economic benefit and borrowing cost can be measured reliably. In that case, we can capitalize the borrowing cost. Okay. Cost to be written off as expense for the period. Now, borrowing cost, which are eligible borrowing cost as per previous two paragraph, which are eligible borrowing cost will be capitalized, and which are other borrowing cost other than eligible borrowing cost, they will be charged to P&L account. They will be charged to P&L account. Those borrowing costs which are incurred for assets other than qualifying asset will be charged to P&L account. Those borrowing costs which are not eligible borrowing cost will be charged to P&L account. So which borrowing costs will be capitalized? Which are incurred or which have a direct nexus with ACP of a QA. Those borrowing costs which have a direct nexus with the ACP of QA. Sir, what is ACP? Acquisition, construction and production of a qualifying asset. Okay. Now next is how to capitalize borrowing cost. Then one very basic and fundamental question is, why are we capitalizing the borrowing cost? What is the logic? This logic they will not tell you in most of the books. Logic of capitalization. So I will today give you why we capitalize certain type of borrowing cost. Now see, this is a building. This is exactly same building. This building you are constructing. Construction of building. This is ready-made available. Understand the logic, which they will not write in the study material. Now there are two identical building. One is ready-made available and one is you have to construct. Now here if you purchase this building, the seller of the building or the builder will charge you not only for cost incurred on material, labor, overhead, but the builder has also blocked his funds. His funds gets blocked for some time. So builder is also going to add his financing cost. Don't you think so? Builder has invested his crores of rupees for 3 years, then he constructed the building, now he is selling the building to you, so he is also going to take into account the financing cost that has gone into that construction work, and of course if you buy, he will add profit margin. But when you construct the building yourself, identical building, construct yourself, you will also incur material, labor, overhead. Same. Of course, you will not make profit from yourself. So profit element is zero. You can't make profit from your own self. But the law or the standard says Had you purchased the building, the price would have included the financing cost of the seller. So you will also consider the finance cost, or in this chapter we call it borrowing cost. You will also consider borrowing cost. Okay, you will also consider borrowing cost. That is the logic, because had you purchased something which is already in a ready to use state, the price of that includes the borrowing cost. So when you are constructing or manufacturing or acquiring for your own purpose, you should also include the financing cost. So somebody who has purchased something ready made and somebody who has constructed, these two figures will become comparable. This will become comparable. So the only difference between the two building cost would be the profit margin of the seller. So that was the reason we capitalized the borrowing cost. Borrowing costs are of two types. Borrowing costs are of two types. One is called specific borrowing and one is called general borrowing. So in your book, paragraph number 5, borrowing cost will be specific borrowing. What is the meaning of specific borrowing? As the name suggests, specific borrowing costs are incurred specifically for acquiring a particular qualifying asset. Very simple. Here the borrowing is for specific qualifying asset. Like for example, you go to the bank and you say, I want to take loan. Bank says, what will you do with this loan? So you will say, I will use this loan for construction of this factory, construction of this building, or whatever. So in this case, the loan is taken specifically for a particular purpose. That is called specific borrowing cost. Okay. So what we will do, in case of specific borrowing cost, the amount to be capitalized is very easy to calculate, because here I am just going to take actual borrowing cost, whatever borrowing cost I have actually incurred. So you can know from your bank statement how much actual interest or actual borrowing cost you have incurred. But sometimes I am not able to utilize the entire amount immediately. So we may park the amount, we may invest that amount temporarily for some per period, so that at least we can generate some income. Let us say the bank gave you 20 crore rupees loan today. This loan is to be used for construction of a building. Now my learned student will reply, will you utilize the entire 20 crore rupees on day one? Let us say I give you 20 crore rupees to construct a building. Will you utilize the entire amount on day one? Will you spend everything on day one, 20 crore rupees? What is your answer? So you will say, no, sir. How can we spend entire 20 crore on day one? You will say, we will probably spend 5 crore rupees today, 5 crore after 1 month, 5 crore after 3 months, 5 crore after 6 months, right? Okay. So the student is saying that 20 crore loan we will receive today, but I am going to spend like this. I am going to spend like this. After 1 month, 3 months, 6 months, 8 months. So are you going to keep the money idle in your current account, or you are going to invest it? Suppose here I spent 5 crore in this period. I still have 15 crore rupees with me. You will not keep 15 crore rupees in your current account. which does not give you any interest, so you will invest it. So when you will invest it, you will get some income out of it. So in case of specific borrowing, this rule is applicable only for specific borrowing. In case of specific borrowing, the borrowing cost to be capitalized is equal to actual borrowing cost minus income from temporary investment minus income from temporary investment. So you will take the actual borrowing cost, full, whatever you have paid on your loan, the entire borrowing cost you will take, but sometime you may generate some income because of surplus amount invested for a temporary period, that is allowed to be deducted. Do not transfer income from temporary investment to P&L account. Here the standard says that income is related to your borrowing only. Because you are taking full borrowing cost, because you are taking actual borrowing cost, the standard says you also need to deduct the income from temporary investment if any, and only the net borrowing cost will be capitalized. Okay. Example of specific borrowing. Example of specific borrowing I am going to explain. A company borrows for investment in a power plant. Now what happened? Since presently there is a requirement for only 50% of the money raised and the balance will be required after 6 months of year 1, the entity invested such funds temporarily for 6 months at 4% per annum. Borrowing cost of year 1 as per borrowing cost as per year 1 was 1015.51 million and investment income was 99.05 million. So what is the story? The story is that you took a loan for power plant. 50% money was used and remaining 50% was invested. The total borrowing cost came to 1015.51 million. Total borrowing cost was 1015.51 million. But during this period, since you were utilizing only 50% of the amount, 50% amount got invested, you had some temporary income which amounted to 99.05 million. Now the question is, how much amount of borrowing cost will be capitalized? Answer. How much amount of borrowing cost will be capitalized? Please reply. How much amount of borrowing cost will be capitalized? Anybody? How much amount of borrowing cost will be capitalized in this kind of scenario? So take the difference between the two figures. The answer is Sanket is saying 916.41. 916.46. Yes, you are right. 916.46 million will be capitalized. Okay. So as far as specific borrowing is concerned, take the actual borrowing minus income from temporary investment, net borrowing cost to be capitalized. So now I am going to take a question from your book. Tanya is also right. You people are really genius. Can you please come to question number 18 in your book? Question number 18. And now this question is important for exam oriented question for 4 marks. This type of question they have asked in the past. So question is, Rainbow Limited borrowed an amount of 150 crore On 1/4/2008, question number 18, for construction of a boiler plant. So this construction of a boiler plant is a qualifying asset at 11% per annum. The plant is expected to be completed in 4 years. Since the weighted average cost of capital is 13% per annum, the accountant of the Rainbow Limited capitalized rupees 19.50 crore for the accounting period ending on 31st March. Due to surplus fund out of rupees 150 crore, income of 3.50 crore was earned and credited to P&L account. Comment on the above treatment with respect to relevant accounting standard. Oh my God. There are two mistakes committed by the accountant. So the student will have to tell me, which are the two mistakes. First mistake, second mistake. Anybody? First mistake is what? First mistake is they have taken weighted average cost of capital. They have taken weighted average cost of capital 13% for calculation purpose. However, we should not take weighted average cost of capital. We should take actual borrowing cost. So the actual borrowing cost will be 11% of 150, which comes to 16.50 crore. This is my actual borrowing cost. In case of specific borrowing, because this is specific borrowing, this amount was borrowed specifically for construction of this boiler plant. Second mistake, this income from temporary investment they have credited to P&L account. This is wrong. This should be deducted from borrowing cost. So please deduct 3.50 from the borrowing cost. So my question is, the net borrowing cost to be capitalized. The net borrowing cost to be capitalized will be 16.50 minus 3.50, and that comes to 13 crore. That comes to 13 crore. Okay. So in the exam, you have to say the company has made two mistakes. Company should use actual borrowing cost, that is 16.5 crore. Company should deduct the income from temporary investment from the borrowing cost, and net borrowing cost should be capitalized because this is a specific borrowing. So the answer is, as most of you have correctly answered, the correct answer is 13 crore rupees will be capitalized. Okay. So this question you read the answer as homework. Answer is printed in detail. So please find out some time today. And in fact, I will say your homework is all questions. You will try today all. Once you are able to try all questions, then in the exam you will be able to solve any question on this topic. Many students do not take this topic seriously and they make small mistakes, but that will cost you a lot. We cannot afford to make mistake here. Now next is general borrowing cost. General borrowing cost means there is no direct identification of borrowing and the qualifying asset. Okay, for example, suppose there is a company XYZ Limited. It has borrowed from many sources. It has borrowed from 11% debenture. It has taken 12% term loan from SBI. then it has taken 5% loan from Bank of Japan, then it has issued zero coupon bond also. Zero coupon bond means the bond is issued at a discount. Bond is issued at a discount. They don't pay interest. Interest will only accumulate. So if the face value is 10 crore rupees, face value, they will issue for 8 crore rupees issue price. Remaining 2 crore is the borrowing cost they are paying. So they are borrowed from multiple sources. Okay. Now the loan is taken from different sources. The amount can also be different. This can be 500 crore, 300 crore, 1000 crore, and this is 10 crore. So loan have been taken from multiple sources. One more thing, the loan may have been taken on different dates also. This loan may have been taken on 1/4/2022. This may have been taken on 1/7/2022. This loan may have been taken on 1/8/22. This loan may have been taken on 1/9/22. Oh my God, so much complication. After raising funds from multiple sources, they have invested in certain qualifying asset. Qualifying asset 1, qualifying asset 2, qualifying asset 3. Now we don't know which borrowing was used for which qualifying asset. We don't know. We have so much of funds, almost 1810 crore rupees we have, and we have invested in qualifying asset 1 200 crore, 350 crore, 450 crore. So total we have invested 1000 crore. I don't know which fund was used, which borrowing was used for which qualifying asset. So when we can't prove that this borrowing is for this qualifying asset, because there is a qualifying asset, the level of borrowing is high. So borrowing is directly attributable to qualifying asset, but we don't know which borrowing was used for which qualifying asset. So then what we will do? Are we going to now capitalize the entire borrowing cost? The answer is no. Are we going to transfer the entire borrowing cost to P&L account? Again the answer is no. So what the standard says? The standard says you will have to apply a weighted average borrowing cost rate. You have to apply a weighted average borrowing cost rate. What is your average borrowing cost? And use that average borrowing cost in the calculation of borrowing cost to be capitalized. So I need to find out average borrowing cost, and then I will multiply the average borrowing cost to the expenditure incurred on the qualifying asset. Okay. So that is how general borrowing cost is capitalized. Come to your book. I have written the notes in your book, don't worry. General borrowing cost include borrowing used wholly or partly for expenditure on qualifying asset. General borrowing cost should be capitalized by applying a capitalization rate. Oh, capitalization rate means weighted average of the borrowing cost. Capitalization rate means weighted average borrowing cost rate. It is the weighted average of the borrowing cost. So this will take care of different amount borrowed, different rate of interest, and at different point of time also. Now the first thing that I need to learn is how to calculate weighted average borrowing rate or capitalization rate. So dear student, please follow me. Today, after today's lecture, you will be confident to solve any type of question from this topic. Okay, but then you need to have patience and participate in the discussion. This is one of the very complicated standards. However, if practiced properly, you will understand it. So, first write down one example in your notebook. Write down example how to calculate capitalization rate or weighted average borrowing cost rate. So, I am sure everybody is ready now. Question is ASF Limited has the following loan outstanding. ASF Limited has the following loan outstanding. Then you draw this table, three columns, amount, amount, rate, date of borrowing. Amount, rate, date of borrowing. So we have two borrowings here. Once you understand two borrowings, then it doesn't matter whether in the question two or three or five borrowings are given, because the logic will be same for all types of borrowing and all numbers of borrowing. So write down in the amount column 10 lakh, 10 lakh. Rate column write down 9%, 8%. Date of borrowing rate 1/4/2023, 1/10/2023. Calculate the capitalization rate. Calculate the capitalization rate. Year ending date is 31st March 2024. Year ending date is 31st March 2024. Year ending date is 31st March 2024. Now, in this question, what is happening? I have to calculate two things: borrowing cost and average borrowing. There are two borrowings. This 10 lakh. The first 10 lakh was outstanding for the full year. So the interest will be 10 lakh into 9% into 12 by 12 on this first borrowing. So that should be 90,000. And there is one more borrowing 10 lakh into 8%. But here it is outstanding for 6 months only. So that means this should be 40,000. So my total borrowing cost is 1,30,000. Do you agree? Total borrowing cost will be 1,30,000. But should I divide this 1,30,000? Should I divide 1,30,000 by total 20 lakh? Will this be right or wrong? Just tell me. If I take total borrowing cost divide by total borrowing, will this be right? Will this be right? Tell me. Use your logic and tell me. Dividing 1,30,000 by 20 lakh, 20 lakh is total of these two borrowing. Is it right or wrong? Is it right or wrong? Is it right or wrong? The answer is this is wrong. Why this is wrong? Here, while calculating the interest, I have taken 90,000 based on full year. 40,000 is based on 6 months only. So even the borrowings will have to be assigned weights. How do we assign weights to the borrowing now? So my average borrowing will be this first 10 lakh was outstanding for 12 months. But the second 10 lakh was outstanding for 6 months. So I'll multiply by 6 by 12. and this comes to 10 lakh plus 5 lakh, 15 lakh. This is called average borrowing. This is called average borrowing. And now my average borrowing cost or rate will be, I have paid 1,30,000 and my average borrowing is 15 lakh. Now if I take 1,30,000 divided by 15 lakh, that gives me around 8.67%. Please check. That gives me around 8.67%, and that is called capitalization rate. This is my average borrowing cost for the year. This is on an average we are borrowing funds at this rate. On an average we are borrowing funds at this rate, that is 8.67%. This is how capitalization rate is calculated. So write down the answer properly. Write down the answer properly. Right. In the notebook, now write down the answer. That was only for explanation part. Presentation is very important in the professional exams because sometimes you lose marks for bad presentation. So we will write down everything today very nicely. Understanding and presentation both are important. Quality is also important and the presentation is also important. See, calculation of capitalization rate, serial number particular. Here I am going to calculate the borrowing cost. Here I am going to calculate the average borrowing. So first you write down A. First was my 9% borrowing. 9% borrowing was outstanding for full 12 months. So my interest would be 9% of 10 lakh into 12 by 12. Write everything. Later on, don't take chance. You may get confused later, 90,000. And this 10 lakh rupees was outstanding for full 12 months. This 10 lakh was outstanding for full 12 months. So the weighted average borrowing will be 10 lakh into 12 by 12. 10 lakh was outstanding for 12 months. So 10 lakh into 12 by 12. Point B, another borrowing is 8%. In the exam, they may give you 3, 4, 5, doesn't matter. Same process we have to follow. 8% borrowing was taken on 1st October. Year ending date is 31st March. So this was outstanding only for 6 months. So the answer is you pay 40,000 and the weighted average borrowing will be 10 lakh into 6 by 12. That is your 5 lakh. Take the total. Total borrowing cost is 1,30,000 and your average borrowing is 15 lakh. Average borrowing is 15 lakh. So therefore, you will write down therefore capitalization rate is equal to this borrowing cost divided by this weighted average borrowing. And that comes to, as you correctly said, 8.67%. 8.67%. So first important thing we have learned in general borrowing, how to find out weighted average borrowing rate. Okay. Then your question will be what I am supposed to do with this. What I am supposed to do with this 8.67%, you have to multiply this 8.67% into average expenditure incurred on qualifying asset. Suppose there is a qualifying asset on which we have incurred, let us say 1 lakh rupees. There is a qualifying asset on which we have incurred 1 lakh rupees. So I am going to multiply 1 lakh into 8.67. So 8670 rupees will be the borrowing cost to be capitalized. This is the purpose of weighted average borrowing rate. Then the student will ask, we have incurred 1 lakh 30,000, but you are only capitalizing 8670. This is general borrowing. Entire borrowing was not for qualifying asset. Borrowing was used for other business operations also. So remaining borrowing cost which cannot be capitalized, what the standard says? Whatever cannot be capitalized will be charged to, come on, will be charged to P&L account. Will be charged to P&L account. So remaining borrowing cost will be charged to P&L account. Okay. Now we will take a advanced question to understand this concept of general borrowing and specific borrowing. Okay. So are you with me? Please write one more question. Please write one more question for clarification and understanding purpose. Write down next question. Very important. This type of questions will be asked in the exam, which you are going to solve now. Very important, write down in bracket. We know limited. We know limited on 1st April. We know limited on 1st April 20x1 20x1 borrowed 9% borrowed 9% rupees 30 lakh borrowed at 9% right now borrowed at 9% rupees 30 lakh to finance the construction of two qualifying asset, to finance the construction of two QA. Suppose you don't have time right now, you can write QA, not in the exam. Construction started on 1st April. Construction started on 1st April. The loan facility was availed on the loan facility was availed on 1st April 20x1 and was utilized and was utilized as follows with remaining funds invested temporarily at 7%. Remaining funds invested temporarily at 7%. Then you draw this table with 3 columns total. Left side date, how these funds were utilized, factory building, office building. Date column right, 1st April 20x0. On 1st April, they have invested or spent, they spent 5 lakh on factory building, 10 lakh on office building, 10 lakh on office building. Then on 1st October 20x1, on 1st October 20x1, again they spent 5 lakh rupees on factory building, and 10 lakh rupees on office building. So if you see the total, this total comes to 30 lakh. This is what they have borrowed, 30 lakh. Calculate the cost of the asset. Calculate the cost of the asset and the borrowing cost to be capitalized and the borrowing cost to be capitalized. Come on, calculate the cost of the asset and the borrowing cost to be capitalized. Now, this question is not clearly given whether this borrowing is general borrowing, whether this borrowing is general borrowing, or whether this borrowing is specific borrowing. Question is not clear on that. Although this question looks like a specific borrowing case, what I will do, I will solve this question two times. Oh, two times. Yes. Why? Suppose the problem says it is a general borrowing. How are you going to deal with that? Or let us suppose specifically it is given in the exam that this is a case of specific borrowing, then how you are going to deal with that? If it is a general borrowing, if it is a general borrowing, then I will have to calculate the weighted average borrowing cost rate. But fortunately in this question, there is only one borrowing. There is only one borrowing at 9%. So therefore my weighted average borrowing rate will remain 9%. And if you are going to treat it as general borrowing, then I have to multiply the weighted average borrowing rate into average expenditure incurred, So if you look at this expenditure on factory building, first 5 lakh was incurred on 1st April, next 5 lakh was incurred on 1st October. So my average expenditure is not 10 lakh, 5 lakh for full year. So 5 lakh into 12 by 12. But this 5 lakh is for 6 months only. So I will have to calculate how much is my average expenditure. Once I get that, I will multiply by the weighted average borrowing rate. So I incurred 5 lakh rupees today. So don't you think on 5 lakh interest should be calculated for full year, and on this 5 lakh interest should be calculated only for 6 months. So that is what we are doing. Okay. So we will calculate weighted average expenditure incurred and multiply by the average borrowing cost, which in this example doesn't require any calculation. It is 9% because there is only one loan. Same thing we are going to do for office building also. Then your question will be, what about the income earned from temporary investment? If it is a general borrowing, then income from temporary investment is transferred to P&L account. If it is general borrowing, so case 1 we are assuming general borrowing. So please solve. Write down. Question should be in front of you and you should give me the answer fast. In the exam, if this question is asked and if you don't have much time, then you assume specific borrowing, because this question is drafted more for specific borrowing. But for understanding purpose, we will also see how to deal with this question if it was a general borrowing. General borrowing means you cannot identify the borrowing with the qualifying asset. So start with first assumption 1, general borrowing. If it is general borrowing, then First, one by one, factory building. Factory building, 5 lakh rupees was incurred on 1st April, 5 lakh rupees was incurred on 1st October. So my average expenditure would be this 5 lakh for 12 months and this 5 lakh for 6 months. So you write like this: 5 lakh into 12 by 12 plus 5 lakh into 6 by 12 plus 5 lakh into 6 by 12. Final answer will be 7 lakh 50,000. 7 lakh 50,000. Point number B, write down. Point number B, borrowing cost to be capitalized. Borrowing cost to be capitalized. So you will multiply 7 lakh 50,000 into 9%. In this question, there is only one borrowing. No need to calculate the capitalization rate. If there are two borrowings, then we can do it. So that comes to 67,500. Now I will tell you the logic of this. If suppose you don't want to do this average borrowing calculation, what you can do? Apply the simple school level mathematics. You have spent 5 lakh rupees on 1st April. So 5 lakh into 12 by 12 into 9% interest we have to consider on the first expenditure incurred on 1st April. Then I have incurred 5 lakh rupees on 1st October. So don't you think I should consider only 6 months interest here? Yes. Now take your calculator and try the calculation. This interest comes to 45,000 and this interest comes to 22,500, which exactly matches with 67,500. So mathematically you can go by this method or you can go by this method. Both are same. In some books you will find the presentation of the answer is by this method, and in some books the presentation would be by other method. Mathematically you are doing the same thing. You are multiplying 9% here directly, and this is the common thing which you have considered. Okay. So this is my factory building. Now write down second point, office building. Please try yourself. Please try office building yourself and tell me how much borrowing cost will be capitalized. In case of office building, 10 lakh was incurred today and 10 lakh was incurred after 6 months. So my average borrowing will be 10 lakh into 10, 12 by 12, and the second 10 lakh into 6 by 12. So this gives me an average expenditure of 15 lakh, and the borrowing cost to be capitalized will be, take 15 lakh, borrowing cost to be capitalized 15 lakh into 9%, that comes to 1 lakh 35,000. Sanket is right. 1 lakh 35,000 is the answer. Now the question is, what is the total borrowing cost to be capitalized? The total borrowing cost to be capitalized will be 67,500, that is your first building, plus 1 lakh 35,000, that is your second building, and that comes to 2 lakh 2,500. Tanya is right. Any query on general borrowing? Okay, no query. Your query could be, what about the income earned on temporary investment? In case of general borrowing, income earned on temporary investment will be treated as income in the P&L account. Now write down assumption 2. Assumption 2 is specific borrowing. In specific borrowing, we will take the borrowing cost incurred minus the income from temporary investment. So first you write down factory building. First you write down factory building one by one. Now if you look at this question, total borrowing is 30 lakh. 10 lakh is for factory building and 20 lakh is for office building. So can I say 10 lakh is taken specifically for factory building and 20 lakh is taken for office building? Yes. So if you are using specific borrowing, then the entire borrowing cost you have to consider. That is your 10 lakh into 9% into 12 by 12. Entire, full. But then there is a benefit here. What is the benefit given to you here? Any income generated, because you are taking for full period, any income generated during this period is allowed to be deducted also, which is not allowed in general borrowing. So my question is, how much is the income earned from temporary investment? Can anybody answer? How much income is earned from temporary investment of factory building funds? Now you see, you have borrowed 10 lakh rupees here. You have spent 5 lakh on 1st April and you have spent 5 lakh on 1st October. This means out of 10 lakh, 5 lakh was spent and 5 lakh rupees was invested for 6 months, because after 6 months you are going to need the 5 lakh funds again. So this surplus was invested for 6 months. So 5 lakh into 6 by 12 and multiply by the interest rate on investment. The interest rate on investment is 7%. Total investment will be only 5 lakh. The reason being, out of 10 lakh, 5 lakh has been spent and it will be invested for 6 months only, because on 1st October you need another 5 lakh for construction work. So I can park 5 lakh rupees only and only for 6 months period at 7%. So do the calculation and the answer comes to 17,500. 17,500 is the right answer, and therefore if I am using specific borrowing, the borrowing cost to be capitalized will be equal to A minus B 72,500. 72,500. This is your for factory building. Now please try in the same format. Try for office building. Try for office building specific borrowing. Come on, everyone, try for office building. If you look at the question for office building, we have taken 20 lakh rupees borrowing and the interest rate is 9%, and the loan was taken on the 1st April itself. So we are going to pay on 20 lakh at 9% for 12 months. 20 lakh into 9%, that comes to 1,80,000. But here also Out of 20 lakh, 10 lakh was spent and 10 lakh was invested for 6 months at 7%. So on this 10 lakh, you would have earned some interest that you can deduct. Okay, that you can deduct. So less investment income. Tell me the answer. How much temporary income you have earned from this investment? 10 lakh into 7% into 6 by 12. 10 lakh into 7% into 6 by 12, that is 35,000. You are right. Chauhan is right. Jain is right. So the answer here would be borrowing cost to be capitalized is 1,45,000. Borrowing cost to be capitalized is 1,45,000. Okay. Below this, write down total borrowing cost to be capitalized. Tanya is right. Total borrowing cost to be capitalized. Everybody should participate. Total borrowing cost to be capitalized will be under specific borrowing assumption 70 to 500 for first building and 1,45,000 for the second building. So the answer is, if you go by this assumption, 2,17,500 is your total borrowing cost to be capitalized. Do you agree? Very important question you have solved. A very likely question in your next exam. 2,17,500. Now what we'll do, I am going to give you some tutorial notes, some gyan. Okay, gyan. Later on, if you have any confusion, first you read the notes, then ask me the query. So write down tutorial note number 1. Now this is not for exam, this is for understanding. So if you get this question in exam, no need to write these points. This is only for you. When you revise it, you will find it easy. So write down in specific borrowing, underline the whole borrowing cost, the whole entire whatever you pay, actual, less investment income, less investment income will be capitalized, will be capitalized. Do not calculate, do not calculate average expenditure. Otherwise, you will be making a mistake if you are calculating average expenditure, which means you are not considering the full interest expenditure and you are also deducting investment income. This will be a mistake. So, in specific borrowing, we don't calculate uh, average expenditure because we are taking total borrowing cost. Second, write down the answer will change. The answer will change depending upon the assumption. If you don't have time in the exam, then I will recommend you follow specific borrowing in this particular question because the loan amount and the expenditure on two building are exactly matching. Write your assumption in the exam. Write your assumption in the exam. Third point, write, do not deduct investment income. Do not deduct investment income. This is a mistake you can make. Do not deduct investment income in case of general borrowing. In case of general borrowing, because in general borrowing, we are allowed to use average expenditure. So when you are using average expenditure, don't consider investment income. And when you are not using average expenditure, you will consider the investment income. That is the logic. Has everybody written? Say yes, then I will go to next discussion. Has everybody noted the answer and this tutorial notes? Right. So we will go to question number 2 in your book. It is there in your book. Question number 2. Example 2 is written probably. So please come to this question you will find in your book. No need to write the question. Similar problem, a little advanced version now. Advanced version, right? Very, very important. If you look at your institute's exams, RTP, MTP, similar questions are there. Advise X Limited on weighted average cost of borrowing and the interest cost to be capitalized based on the following: total borrowing and interest cost of X Limited for the year ending 31st March 2005 are as follows. So these are the different dates of borrowing. The first borrowing is on 1st April. It is an 18% bank loan. Loan amount is 1000 and they have calculated the interest for you. How they have calculated? 1000 into 18% into 12 by 12. If this column is not given, then this is how you will calculate it. Fortunately, it is done. One working note you can skip: interest calculation. Another loan is 110 2004. It is a 14% debenture 2000 and interest is 140 2000. Let us check into 14% into 6 by 12 because it was taken on 1st October. So please confirm 140 is right. Then another loan is 1st July because they should have given this here. Wrong sequence just to confuse an already confused student. 16% loan 3,360. So let us just try on your calculator. 3,000 into 16% into, this is for 9 months, 360. And if you take the total of this interest for the entire year, they have incurred an interest of 680 rupees. Please check. They have incurred an interest of 680 rupees. Okay. The total borrowing is 6,000. Now, what mistake the student can make? He may divide 680 by 6,000. That will be wrong because these borrowings are outstanding for different period. So, I need to calculate weighted average borrowing by checking the period for which they were outstanding. This was outstanding for 12 months. This was outstanding for 6 months. This was outstanding for 9 months. So therefore my average borrowing will be different than 6,000. Okay. So this would be one working note required. After that, we will calculate capitalization rate. 680 divided by average borrowing. Once you calculate that weighted average borrowing cost or capitalization rate, then you will see the qualifying asset in which these borrowed funds are used. So there are three qualifying assets: factory shed, plant 1, plant 2. This is the expenditure incurred and this is the period for which these expenditure were incurred. So what I'll simply do, 2500 into 12 by 12 into capitalization rate. 1500 into 9 by 12 into capitalization rate, 1000 into 7 by 12 into capitalization rate, and that will give me the borrowing cost to be capitalized. Okay, so this is similar to the previous one, but with little more data. There are three general borrowing. All these are general borrowing because they have not mentioned which loan was taken for which of these three qualifying assets. So we have no choice but to assume that these are general borrowing. Okay. So write down step number one. Very easy question. Once you start understanding, you will say it's a very easy chapter. Step one, write down weighted average borrowing. Weighted average borrowing. Step number one, weighted average borrowing. Weighted average borrowing is equal to 1000 into 12 by 12 plus 2000 into 6 by 12 and plus 3000 into 9 by 12. So please calculate and tell me what is this figure. One student is saying 4250. You are right. I also got the same. 4250 is your average borrowing. Average borrowing. Now write down below that weighted average borrowing rate, step number 2, also called capitalization rate. You can write in bracket capitalization rate. Suppose you don't have time to write such a big statement, weighted average borrowing rate. So then what the student can do, he can just write capitalization rate. I require two figures. First, I will require borrowing cost, actual 680. This is given. If it was not given, calculate it. Then write down, therefore, weighted average borrowing rate 680 divided by 4250. 680 divided by 4250, you'll get 16%. Kindly check. Yes, Sanket is right. 16% is right. Now, what is the use of this 16%? I will use it for multiplying with the expenditure incurred on qualifying asset. Okay. So please come to step 3. Step 3 is ascertainment of borrowing cost to be capitalized. Ascertainment of borrowing cost to be capitalized. Then draw this table, qualifying asset, expenditure, number of months, and last column is borrowing cost to be capitalized. Borrowing cost to be capitalized. 4 columns, keeping one line blank, write down between two assets, keep one line blank. Factory shed, plant 1, plant 2. Factory shed, plant 1, plant 2. The expenditure incurred is 2500, 1500, and last one is 1000. This is given in the problem. A number of months is also given. If it is given, then you have to apply the number of months for interest calculation. If not given, directly multiply by the full amount. If construction expenditure is given at different point of time, then apply average expenditure. Okay, according to data, change the answer. If they would have mentioned that out of 2500, 1250 was incurred here, 1000 was incurred here, 250 was incurred here, different point of time, then calculate average expenditure. Nothing like that is given. Okay, so question is not properly drafted, but this is how we will solve. 2500 into 16% into 12 by 12, 400. Plant 1, 1500 into 16% into 9 by 12. Check 180. Plant 2, 1000 into 16% into 7 by 12. 93.33. This way, the borrowing cost will get capitalized. And now take the total. The total comes to 673.33. Check the answer. 673.33. It should not exceed the actual borrowing cost. Okay. We have to check the total. It should not exceed the actual borrowing cost. How much was the actual borrowing cost? The actual borrowing cost was 680 given in the problem also. You are capitalizing only 673.33. What will you do with the balance? The balance will be transferred to P&L account. The balance should be transferred to P&L account. Your question will be, what if this is more than 680? Then I will restrict myself to 680 only. I will not take more than 680. Is it right? If this figure is more than 680, then I will take 680 only. So we will take a different problem where my total will exceed the actual borrowing cost, and that time with actual calculation I will show you how to deal with that. Okay. So write down, below that write down step number 4. Step number 4, write down borrowing cost to be expensed. To be expensed means to be charged to P&L account. Now the answer would be total borrowing cost minus borrowing cost to be capitalized. Total borrowing cost minus borrowing cost to be capitalized. 680 minus 673.33, and that is 6.67. That is 6.67. This will go to P&L account. This borrowing cost will be transferred to profit and loss account. The remaining borrowing cost, this amount, will be added to the cost of the qualifying assets. Okay. So this answer is over. Next question. Question number 23. So if you take your notes and turn few pages, you will come across one very important question number 23. And this we are going to solve in the notebook. In spite of the fact that the answer is printed, we are going to solve in the notebook so that you will practice in class, and our format will be different from the institute's format also. So all of you please come to question number 23. Keep the notes in front of you and you mark it very, very important. I am going to take all important questions which they ask in your exam. So continuously pay attention. Have you reached question number 23? Say yes. Yes. The borrowing profile of Centra Pharmaceuticals Limited, set up for the manufacture of antibiotics at Navi Mumbai, is as under. Now this paragraph, this table is very important. They have taken on 1st January a 15% demand loan. So the interest rate is 15%. And demand loan means the bank can ask for repayment anytime. Amount 60 lakh. What is the purpose? Acquisition of fixed asset. So it is a general borrowing. And the other incidental expenses are 8.33%. Not only you have to pay interest, you have to also incur incidental expense on this borrowing, that is processing fees, brokerage, all this together are called incidental expense. So what is the new thing you will learn in this question? This column, which was not there. Other new thing you will learn in the same problem. In the same problem, there is a specific borrowing also. On 1st July 2008, term loan was taken 40 lakh, but this is for acquisition of, now they mentioned plant and machinery. Plant and machinery means this becomes specific. Fixed asset is a general term. Again on 1st October, there is a 14% bond, amount 50 lakh, acquisition of fixed assets. So this also you will call general borrowing. General, and in between you have specific. And these are some other incidental cost. This will also be treated as borrowing cost in your calculations. Any query till now? The incidental expenses consist of commission. This is what they are explaining here. And service charges for arranging the loan and are paid after rounding off to the nearest lakh. So you have to round off to the nearest lakh. Anyway, that is not very important. Now below that they have mentioned where this borrowing was used. The fixed asset consists as follows. Fixed asset considered as qualifying assets are as under. So there is a sterile manufacturing shed. There is a plant and machinery total and other fixed asset. These are qualifying asset 1, 2, 3. Now as far as plant and machinery is concerned, you have spent 90 lakh. Out of that 90 lakh, 40 lakh is specific borrowing. But only 40 lakh was specific borrowing. Remaining amount would have been spent out of general borrowing. So in case of plant and machinery, I will have to consider not only specific borrowing, I have to also assume that the remaining expenditure on plant and machinery was out of general borrowing. So always first we will assume that expenditure is out of specific borrowing, but if that specific borrowing is not sufficient, we assume balance borrowing is out of general funds, general borrowing funds. The project is completed on 1st January 2009. And when was it started? Different dates are given here in the question, and is ready for commercial production. Show the capitalization of the borrowing cost. Very important question. You have general borrowing and specific borrowing in the same problem. You have also incidental expense adjustment in the same problem. So please take out your notebook and write down their question number, page number, and start solving. So first you write down specific borrowing term loan, step 1. Specific borrowing dash term loan. Specific borrowing term loan, right hand side two columns, calculation column and borrowing cost. You have to calculate interest also, you have to calculate incidental expense also. This time incidental expense is also there. So first you write down interest. First write down interest. Interest will be charged on term loan. Term loan was taken on 1st July. So you keep question in front of you. Question number 23. 40 lakh rupees the loan. Just look at that middle sentence. 1st July 2008. 14.5% is your interest rate on term loan, and the term loan was taken on 1st July. So I will apply 6 month here. So that comes to check the answer 2.90 rupees in lakhs. 2.90 rupees in lakhs. Then write down incidental expense. Incidental expense will be simply 5% of the loan. The broker or the commission simply ask you a flat rate. Don't multiply by 6 by 12. It is incidental expense. It is flat, 5% of the loan amount. 5% of 40 is 2. So this is my specific borrowing cost, 4.90. This will be charged to plant and machinery. Do we have any investment income in this question? Check and tell me. There is no investment income in. Okay. So my life is easy. No further adjustment. This 4.90, you will capitalize it over the cost of plant and machinery. This will be capitalized over the cost of plant and machinery. This is my specific borrowing. Now we'll come to general borrowing. So you will give it step number 2. Now we have to calculate weighted average borrowing rate for general borrowing. 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 Write down this format. So I need to do two calculation. I need to calculate how much is the total borrowing cost and how much is your average borrowing. Total borrowing cost will be interest plus incidental expense, and average borrowing will be, we will take the average of the first and the third borrowing. Okay. So question should be in front of you continuously. So first you write down point number A, demand loan. Point number A, write demand loan. Demand loan, first line of the table, 60 lakh into 15%, and it is for full year. It is for full year. So I will take 60 into 15% into full year. The interest portion is 9 lakh, and there is an incidental expense also. So incidental expense will be flat 8.33% of 60. So take the calculation, and the question says you have to round off to the nearest lakh. round off to the nearest lakh, 5 lakh. The total comes to the total comes to 14 lakh. The total comes to 14 lakh. Now, next you write down second point B, bonds. We have two general borrowing, demand loan and bonds. Here also we will have two calculation. First write down interest. First write down interest. 50 into 14% into 3 by 12. 50 into 14% into 3 by 12. It is outstanding for 3 months only, from 1st October to 31st December. Into 3 by 12. So check the answer, 1.75. And then there is an incidental expense of 8%. Incidental expense is a flat rate. Okay, this is flat rate. Don't apply time. This is flat rate. So this is 4. Total is 5.75. 14 and 5.75. My total borrowing cost. Point number C, write down. Total borrowing cost will be 14 and 5.75. That is your 19.75. Now write down weighted average borrowing. Point number D. Weighted average borrowing. There are two borrowings, 60 lakh and 50 lakh. 60 lakh was for full year and 50 lakh was for 3 months only. And 50 lakh was for 3 months only. So you will take 60 plus bracket 50 into 3 by 12. Check the calculation. 72.50 lakh. 72.50 lakh. This is my borrowing cost. This is my average borrowing. So therefore point number E would be weighted average borrowing rate. Weighted average borrowing rate or capitalization rate. C by D. C by D, and that comes to 27.24%. 27.24%. Is everybody getting 27.24%? Say yes or no. 27.24% is right, everybody? If the answer is yes, we will go to our next part. Because once this weighted average rate we have got it, then my task become easier. So this was my step number 2. Now write down step number 3. Step number 3, general borrowing cost to be capitalized. General borrowing cost to be capitalized. General borrowing cost to be capitalized. Draw this table and I will tell you the logic. First draw the table. Qualifying asset. Qualifying asset. Under that next column, expenses. Expenses. Then write down specific borrowing. Very important question you are solving. General borrowing and borrowing cost at the rate of 27.24%. Borrowing cost at the rate of 27.24%. Format is ready. Now in qualifying asset column, right, first qualifying asset is manufacturing shed, right? Manufacturing shed, one line blank. Second is plant and machinery. Third is other fixed asset. Question says all of these are qualifying asset. And then in the question, they have given you the expenditure incurred 10 lakh, 90 lakh, 10 lakh. This is given. Now, if you have specific borrowing and general borrowing both, understand that out of this 90 lakh, you have used 40 lakh rupees from specific borrowing. 40 lakh on this 40 lakh, I have already calculated the borrowing cost. On this 40 lakh, I have already calculated the borrowing cost. So if I take on 90 lakh again general borrowing, it will be double counting of the same thing. So I need to first deduct 40 because out of 90, 40 is from specific borrowing. So general borrowing used for plant and machinery will be 50. But for other two, there was no specific borrowing. So 10, 50, 10 is your financed out of general borrowing. Now you can simply multiply these numbers and you will get the answer. And then take the total. And then take the total. Come on. How much will you calculate for manufacturing shed? Answer. Plant and machinery? Answer. Other fixed asset? Answer. Multiply only. So the answer would be, anybody? Come on, last column. 2.724, right, for shed. 13.62 for plant. 2.724. 2.724 and take the total. This comes to 19.068. 19.068. Your actual general borrowing cost was much higher. Therefore, this we can capitalize. Your actual general borrowing cost was 19,75,000. Your actual general borrowing cost was 19,75,000. This is 19,06,800. So therefore, you can capitalize this entire amount and whatever is the balancing figure will get transferred to P&L account. Is it right? So Tanya right, Sanket right, write a note. Actual borrowing cost is rupees 19.75 lakh. Actual borrowing cost is rupees 19.75 lakh. Therefore, borrowing cost to be charged to P&L account, borrowing cost to be charged to P&L account, 19.75 minus 19.068, and that is equal to 0.682 lakh rupees. 0.682 lakh rupees. Everybody, is it right? 0.682 lakh rupees. This way, this type of question will be solved. Now the last part, write down. Total borrowing cost to be capitalized. Total borrowing cost to be capitalized. So here I am going to add specific borrowing and general borrowing cost. Please write 4 columns quickly. QA, qualifying asset. specific borrowing, general borrowing, and total borrowing cost to be capitalized. Manufacturing shed, plant and machinery, other fixed asset. You have computed specific borrowing cost in step number 1 for plant and machinery. Go to step number 1, you will find 4.90 lakh there. So specific borrowing cost 0, 4.90, 0, 4.90, and general borrowing in the previous step you have computed. General borrowing 2.724, 13.62, 2.724, 2.724, total is 19.068, 19.068. Now take the total of these two columns. So final answer is 2.724 will be capitalized over manufacturing shed, 18.52 over plant and machinery, and 2.724 over other fixed asset, and this is my final total 23.968. This is the total borrowing cost that will be capitalized in this problem. Okay, so based on the data given, this is the answer. Now any query? If you have any query, please ask me now. Any query on this wonderful and very important question? No query? Okay, one more question we will practice. In the notebook, we will practice question number 22. This will give you practice. Now, this is a very good question for understanding. So, please come to the previous question printed in your book, and that is question number 22. In the previous question, the student is asking whether period of plant and machinery will not be considered. This question has not given us the not given expenditure incurred on different dates, not given expenditure incurred on different dates, not given, hence ignored. Okay, they have not mentioned in the problem how much expenditure was incurred on different dates, right? So we will assume these are average expenditure given to you. We will assume the expenditure given are average expenditure, otherwise you can't solve the problem. You need different dates when expenditure are incurred, because you can't incur all the expenditure on the first day of the year. But because we don't have data, this is how we solve, and we assume that expenditure given are average expenditure. Okay, assume, you can write this note if you want, otherwise not required. Expenditure given are average expenditure. Now we'll take a question where expenditure is given on different dates. That is why I said the next question is better. It is a more appropriate question. Question 23, practically that is not how it will work, because expenditure will be incurred at different points of time and we have to get the weighted average of expenditure. Anyway, you have raised a very good query. Come to question number 22. This is a very, very good question And when you will go to offices, you have to apply the way we are going to solve this question. Okay, so quickly, please respond fast, and then this question we will solve in notebook. Solve in notebook, even though the answer is given, but we are going to follow a different presentation. X Limited began construction of a new building on 1st January 2007. Underline, it obtained rupees 1 lakh special loan to finance the construction of the building on 1st January 2007. So this is a special loan, means specific loan. Specific loan, rupees 1 lakh. Specific loan taken is 1 lakh for building. And when was the loan taken? On the same date, 1st January 2007. Interest rate is 10%. So here you will first assume that you will use specific loan for expenditure purpose. The company's other outstanding are two non-specific loan. These are general borrowing. These are general borrowing. Please practice all questions. Now you can do all questions. Don't worry. These are all similar type. These are two general borrowing, 5 lakh, 9 lakh, 11%, 13%. Date is not given, means you will take full year, because it was already outstanding for the entire period. So here we will assume full year. Expenditure that were made on the building projects were as follows. Now here we have been given, in January you incurred 2 lakh, in April 2.5 lakh, July 4.5, December 1.2. This is a correct way of giving the question. In January they incurred 2 lakh. How they will incur 2 lakh? 1 lakh rupees will be out of specific loan. First I will give priority to specific loan, and remaining 1 lakh is out of general borrowing. So here I am going to apply the actual borrowing cost, and here I am going to apply the weighted average borrowing rate. Similarly, all these remaining three items I am going to multiply by weighted average borrowing rate, which I will calculate from this data. Okay. Here I am going to multiply by the period, because the student had asked me about period. Now because the dates of expenditure are given, you have to multiply by, let's say, 9 by 12 or 6 by 12, 1 by 12, something like this. Okay. So in this question we have to multiply by period also. That was your query, because the data is now available. Building was completed by 31st December. Very good. From the following principle prescribed in AS 16, calculate the interest to be capitalized. And one more question, pass one journal entry for capitalization of the borrowing cost in respect of the building. So this time one extra question is passing of journal entry. No problem. So this is a good question, because this is how the question should be asked. It is a more realistic question. So please write down, I need one weighted average borrowing rate. Once that is available to me, then this question will become very simple. So my dear students, what I need weighted average borrowing rate for general borrowing. First chance I will give you, 30 seconds I will give you to try your luck and give me the answer. What is weighted average borrowing rate? 5 seconds more. What is weighted average borrowing rate? 2 seconds more. So write down time over. Right hand side 2 columns. Calculation and rupees in lakhs. One student has given the answer 12.29%. Okay, we will check. So in this question, the time is 12 months for both the loan. So write down first point A, first loan. On first loan, 5 lakh at 11%, 55,000. Second loan, question in front of you, 9 lakh into 13%, 1 lakh 17,000. Therefore, the total is 1 lakh 72,000. 1 lakh 72,000. Total interest on general borrowing is 1 lakh 72,000. Then write down point C, weighted borrowing or weighted average borrowing. You will just add the two numbers 5 lakh and 9 lakh. Why? Because both are outstanding for full year. Both are outstanding for full year. So you can just add them 14 lakh and therefore write down point number D. Therefore, point number D, your weighted average borrowing rate 1 lakh 72,000 divide by 14 lakh. So you're getting 12.29%. Saurav is getting 12.28%. Rajendra is getting 12.28. So you can round off to 12.29. So all of you take 12.29%. Then you can follow my subsequent answers. 12.28 is also okay. Don't fight for that. 0.01 don't fight. We have many other things to fight for. Now write down step number 2. Calculation of borrowing cost to be capitalized. Calculation of borrowing cost to be capitalized. Come on. Here write down month, specific borrowing and general borrowing. In this question, the expenditure have been incurred on January, April, July and December. They have not mentioned whether it is 1st January or 31st January, 1st April or 30th April. So we will assume that expenditure was incurred at the beginning of the month. So if it is beginning of the month, this gap is 12 months. This gap is 9 months. This gap is 6 months. And this will be 1 month. This is how we will do the calculation of interest. Ready? Right. First write down January. You have taken 1 lakh rupees specific loan in the first line of the question at 10%. And this is incurred on 1st January only. So I will take full. Specific borrowing loan in any case is taken for the actual amount. Loan was taken on 1st January for 12 months. So this is 10,000. How this 1 lakh has come? You can mention somewhere it is 2 lakh expenditure minus 1 lakh specific borrowing. Minus 1 lakh specific borrowing into 12.29% into full year because it is given January. We will assume 1st January. Now write down April. No more specific borrowing, that was fully utilized here. Now everything will go in general borrowing column only. 2,50,000 given into 12.29% and April 1st to December 31st, 9 months. Multiply and give me the answer. Is it 23044? Is it 23044? And then write down July. Then write down July. July you have incurred 4,50,000 into 12.29% into 6 by 12, 6 months. 1st July to 31st December. 27563. Check. December 1,20,000 into 12.29% into 1 by 12 into 1 by 12, that is 1229. 1229. And if you take the total, specific borrowing is 10,000 and general borrowing is 64,216. General borrowing is 64,216. Bracket write down approximately. Due to rounding off, the answer of two students can be little different. So difference of 100, 200 rupees is also okay. 64,216. So first I will write a note here. It is assumed that expenditure was incurred at the beginning of the month. Expenditure was incurred at the beginning of the month. It is assumed that expenditure was incurred at the beginning of the month. And second note write down, alternatively, we can calculate average expenditure and then multiply by capitalization rate. So there are two ways you can do it. Either first you get the average expenditure, all this expenditure first you multiply by respective months. 1 lakh into 12 by 12, 2,50,000 into 12 by 12, 9 by 12. So you get average expenditure and then multiply by this common number 12.29. Whichever suits you, you can do it. Both are allowed. Now write down journal entry. They have asked you to pass one journal entry also. So the total value of the building will be total expenditure incurred 10,20,000. If you take the total on construction work only, this 1 lakh, 1 lakh, 2 lakh 50,000, 4 lakh 50,000 and 1 lakh 20,000. So all this together is 10 lakh 20,000. Okay. And then you have to also add the interest which you are going to capitalize. So the answer would be building account debit, to bank account, building account debit to bank account. 10 lakh 20,000 plus 10,000 and plus this figure, whatever you have got it, consider it. Take the total and write it here. Write the same figure here also. Match it with your notebook. Being building capitalized. Okay, so this answer is over. This answer is over. Now we'll continue tomorrow, same time. Thank you very much. Bye bye. Take care. Have a good day.